U.S. home prices would end 2023 back at price levels achieved at the height of the boom in June of 2022. Let that sink in. All right, if you are still in the market to buy a house right now, I'm so sorry. I know it's really, really stinking hard right now to still find a house. So let's take a look and see what the analysts are saying. Where are the forecasts now? What are they saying about the rest of this year based on what's happened in the first quarter? It's pretty funny because there's some vastly different opinions between a few analysts, and then a few were saying prices are still going up, and a few were saying that the market's still going to crash. So I don't know about that. So let's see. Let's take a look at this article and see what they're saying. So this is from fortune.com. Housing market correction is losing steam. Okay. So it goes on here to say in the second half of last year, the U.S. housing market slipped into the first price correction since the housing bust bottomed out in 2012. Through January, national home prices measured by Case-Shiller have fallen 3% on a seasonally adjusted basis, or 5.1% without seasonal adjustment, since the June 2022 peak. Out west, the correction was particularly sharp as markets like Phoenix and Seattle saw home prices fall 10.4% and 16.3% respectively from their peak. Now remember, the peak being June of last year. In the eastern half of the country, the correction is much milder as some regional housing markets, including Cleveland, saw prices decline by less than 1% since the peak. But the story is already changing as the housing market moves into its busier spring seasonal period. The correction is losing steam. So this is where it gets interesting. Now, here we are, we're mid-April. Okay, the day I'm recording this, it's April 11th. So we're just about like mid-April right now. So we're like in the thick of spring market right now. Now it goes on to say among 200 largest housing markets tracked by the Zillow Home Value Index, only 38% of major markets notched a month-over-month home price decline in February. Let that sink in. Only 38% of the markets marked a home price decline. That's not a lot. It goes on to say at the height of the correction in September, 79% of markets fell on a month-over-month basis. So 38%, that's not a lot. So why is the home price correction absent in some markets like the Northeast and Midwest? Well, first of all, they say here, we've entered the seasonal period where demand picks up. Okay, so now the buyers are back out. It's spring. Here we are. Second, the inventory in the month of March was 49.5% lower than 2019. What? The third reason why this correction is slowing down is the housing affordability has improved a bit over the past few months as mortgage rates came back down under 7%. So you have these three factors right now. So it ain't collapsing right now. No, the market that is not collapsing. And I could tell you here in New Jersey, it's still the same thing. I mean, we've seen some price reductions a little bit. We're still seeing multiple offers, guys. Still seeing it out there. As the house is priced right, it's just flying off the market. So let's get into what the different analysts have to say, what their predictions are for the rest of the year. These companies have revised their forecast for the rest of 2023. Now let's take a look. CoreLogic. Now CoreLogic expects U.S. home prices as measured by the CoreLogic HPI to rise 3% between January 23 and January 24. If they are right, listen to this. U.S. home prices would end 2023 back at price levels achieved at the height of the boom in June of 2022. Let that sink in. The prices will end as where they were at the peak in June of 2022. Remember how high prices got in the whole year of 2022. Zillow, moving on to them, the economists at Zillow, they're predicting that home prices will rise 1% between February of 23 and February 2024. Now, that's interesting. I mean, they are showing them rise, but just by a little bit. The Mortgage Bankers Association, they show U.S. home prices as measured by the FHFA U.S. House Price Index falling 0.6% and another 1.4% dip in 2024. Now, they go on to say, while we would still characterize the path for the National Home Price Index as flat, we are now forecasting several quarters of year-over-year declines in the level of national home prices. We had already been expecting some pretty significant declines in the West and mountain regions of the country. They are showing a small dip, just a small decrease in prices. So basically, let's just call it what they're saying. It's flat. They're saying prices are going to remain flat. I hate to interrupt this riveting information, but you got to do me a big favor. Do not forget to like this video and feel free to subscribe. I'd love to have you join this channel and join our community because, we have a lot of fun here and we have a good time and I like sharing all this information with you. So subscribe. Now, here's what Goldman Sachs has to say. Goldman Sachs, the investment bank expects U.S. home prices as measured by Case-Shiller to fall 2.6% in 2023. So Goldman Sachs is saying that'll take us to a 6% peak to trough decline. Remember, peak being June of 2022. On a regional basis, we project larger declines across the Pacific Coast and Southwest regions. Yeah, it's going on right now, and that will continue. And more modest declines across the Mid-Atlantic and Midwest, which have maintained greater affordability over the past couple of years. And that is true. If you remember my video from earlier in the year where I shared with you the predictions from Realtor.com, Redfin, and Zillow, they were all saying that this year, the Midwest and the Northeast wasn't really going to get hit that much as far as price declines because of their affordability. People are now going to be flocking to those cities and states because it's much cheaper to live. Their homes are much more affordable. Moving on, Fannie Mae. The Fannie Mae economist predict that U.S. home prices are going to fall 4.2% in 2023 and another 2.3% dip in 24. Fannie Mae is currently modeling an average 30-year fixed mortgage rate of 6.5% in 23 and 5.9% in 24. Now stick around because I have my opinion about that with the mortgage rates and where they're headed. So I'm going to get into that in a little bit. Moving on to Moody's Analytics. The firm expects U.S. prices as measured by Moody's Analytics Repeat Sales House Price Index to fall 4.2% between the fourth quarter of 22 and the fourth quarter of 23. In total, Moody's expects a peak to trough U.S. home price decline of 10%. If a recession were to manifest, Moody's would expect a top to bottom home price drop to 15 to 20%. I don't know, Moody's. I'm not convinced by that one. And finally, we have KPMG. KPMG is one of the big four accounting firms. They expect U.S. home prices, as measured by Case-Shiller, to fall 8% in 2023. If KPMG's latest forecast is right, the U.S. housing market in 2023 would soon experience its sharpest home price decline since 2008, a year that saw national home prices plummet 11.9%. Okay, so there you have it. Who do you agree with on these forecasts? What are you thinking? How do you feel about it? Do you agree with any of them? Comment below. I really want to hear what your thoughts are on this. I'm really curious. Now, let's go into my thoughts about this. First of all, we have to look at the mortgage rates. Okay, the mortgage rates obviously has been driving this. So when the mortgage rates dropped back down in January, we saw a flurry of activity. That's when the buyers came back out. Loan applications were up and the insanity ensued. So what's going to happen now? Okay, the rates are in the 6 range, right? They dropped again just last week to like 6.28%. But we have to look at this very important date, May 10th. May 10th is when the consumer price index number will come out. What they're predicting is that CPI is projected to be lower than the prior year. So when that happens, if it is lower, that's showing that we are in a pretty good position and inflation is coming down. So what's that going to do to the mortgage interest rates? You know where that's going. They're going to drop again. So back in January, there were some analysts that were saying it's possible that by May, interest rates could fall down into the 5% range. Hearing Fannie Mae's predictions saying that home prices are going to fall 4.2% this year, and they're forecasting that interest rates are going to stay around 6.5% this year. I don't know. I mean, nobody knows that, but I don't know where they're coming up with that, because if this is true with this projection of the CPI coming out on May 10th, that's going to bring interest rates back down again. And it's going to be insanity all over again. And the prices are not going to drop because people are going to be bidding on what very little housing inventory there is out there. Again, that's my opinion. That's what I think is going to happen. If the rates remain the same, okay, so say if we stay flat, even in the 6% range, I still don't think it's going to drop prices that much this year because, again, We go back to the inventory, and people need a house. So homes are still flying off the market. They're getting at least asking price, sometimes over asking price. I mean, some places here in Jersey, we're still seeing a lot of homes sell for over asking price. I don't think it's going to drop the prices that much, at least not here in the Northeast. Definitely in the West, that's going to continue to go down because it's overinflated to begin with. So if you're out in those markets and you're looking to purchase, good for you. You could be able to score a good deal right now, but everywhere else, not so much, not so much, because there's not enough houses. You may have heard me say this before. I've read an article where analysts are saying that it could take 10 years to recover from this housing shortage. 10 years to bring in enough housing for everybody in this country. We still have a shortage of like 4 million homes in this country today. So that's the problem. That is what's going to be keeping these prices from not dropping by a lot. They're not. And I think in some cases, like what Zillow is saying and CoreLogic, I do think they're going to go up this year. I do. So that's my opinion, guys. Let me know what you think. Drop your comments below. I love hearing from you. Let's have a conversation about it. So if you are really considering buying and you're thinking, okay, renting may be too expensive, there are some places in this country where it is better to buy a house than to rent. You can check this video out over here. I did this last week, and it tells you all about the places in the United States where it is cheaper to buy a house than to rent. Thank you so much for watching me today to get your dose of real estate reality. My name is Jackie Baker, and I will see you next time.